Welcome to Rebecca Sounds Reveille. What a show again I have for you, because with me today I have someone who is an options strategist with Simpler Trading. In fact, he's from a small town in West Texas, and he's going to bring us a really light-hearted composure about options. And for those of us who are kind of fuzzy about options, well, he's going to give us a clearer vision. In fact, he has, well, almost 2 decades of trading, and he's got this really solid grasp of, well, trader psychology. And I find this really fascinating because psychology really gives us a lot of information about things we do and the habits we do and why we choose things the way we do. And I think that this is really important when it comes down to our finances and how we handle them. This is something that I think my guest is going to really give us some insight on, because he knows about something called a reliability factor and a relatability factor. And I've got to tell you, when I spoke to him off air, he's got such a good, yes, relatability factor about him. So I want to bring him to you and get him to be able to relate to you and help you make your options better than they may be already. So with me today, I have Jack Roberts. Welcome to the show.
Thanks for having me.
You are so welcome, and I am just delighted because you are so personable and reliable and relatable. And I've got to tell you, you really have captured my attention in some things about your background, and I know that they're going to come out right here on the show. But first, I want to ask you how you got into options.
So it started whenever I was a kid. I had a really smart grandfather that taught me a lot about equities and would make me read the Wall Street Journal as a young kid. And it was basically the idea that I could learn as a young kid trading psychology. I basically turned that into my passion, because also I never really wanted to work for anyone else. I always wanted to work for myself. And I know that trading options or getting into the stock market in general is basically risking your own money or risking your own investment. And if I got good enough at what I could do, then I'd be able to make my own income and be more self-reliant. I would understand market psychology, economic behavior cycles at an early age. And then turns out in college, I would start out at Baylor University and I would finish up in Austin, Texas, basically a degree in psychology. And the only thing that I focused on was statistics, and I was actually rather good at it. So I don't like to toot my own horn, but I also like to say that there was a purpose in my life that was put in ironclad cement by the time I was 25, saying that I would be trading options, I would be self-reliant on my own economic decisions, and then that turned into a blossoming career being an expert in trading options. But it certainly stemmed from my interest first on the brain and how we operate, and basically, and sorry if this sounds kind of millennial ironic, but how we stream data, right? And so
I like that.
Yeah.
I like that. This is absolutely fascinating. And with what you're sharing, this is right up my viewers and listeners' realm, because everything that we do is based on the things that go on internally in our psyche. So this is really what happens within our show. One of the things, though, oftentimes that happen is in certain areas, we tend to focus on things in life, such as family or career or whatever. But sometimes we tend to let other people handle our finances, or we may be afraid to get involved with things such as a 401k or 403b. We let our work, human resources handle that, or we have a financial advisor who takes care of things. So when we hear terms such as options, we may not necessarily understand what options are, or we may have a basic understanding but not necessarily know what they do. So, for the listeners out there who may not know what options are, could you share a little bit about what they are and then sort of elaborate a little bit about what it is they do and how we interact with options?
Yeah, sure, absolutely. So a lot of people like to confuse options with just regular stocks or equities and how they move. But basically, it's very simple. You have the stock market and then you have derivatives. And derivatives are basically options. And what that means is this is another way to invest in the stock market, but use leverage to your favor. And they're basically contracts that are tied to the stock market that basically expire at a certain date forward in time. And what that means is you can buy a certain contract, let's say in Tesla. Everyone knows Tesla. I try to choose names that everyone knows about. So let's say Tesla is sitting at a certain price. I would like to buy contracts or options with the idea for a certain amount of money saying, hey, if it gets to this level, and we don't have to use any figures for this, but if it goes higher, and I've already bought a call option, what we call basically long in the stock market, or betting that the price of that Tesla stock is going to go higher, well, then the options contracts that I've bought saying that the price would go higher at a later date of expiration will be of value to me. I can buy those at a small price and sell those at a larger price. Basically what Walmart does in the wintertime, they buy millions of hot dogs to sell you during the summer of the next year, right? So that's the basic idea behind options. And on a psychological, kind of on a larger, I would say more adult scale, it's another way to be able to invest your money and be the captain of your own ship, which is important not only to the baby boomer generation that's retiring now, but also the millennial generation that is actually drowning in debt. And we can talk about this more, but basically you can take the reins of your own financial world by actively investing, whether that's from 1 week out to 2 weeks out, or you're purchasing or selling options further out 3 or 4 months. But basically, it's another way to be way more active and to potentially grow a savings account on your own.
This is very fascinating because I think that there's some actual opportunity here to capitalize on funds a lot quicker.
Yeah, and I can give some really good examples. So if I generally understand that we're in a bull market, which we are, we're pretty much in the most powerful bull market that we've seen since 2001. You know, you could argue other dates, but basically let's stick with the plan. So far, we've had a pretty strong 2019. And what I wanted to do this year was focus on technology, focus on cloud computing, Amazon Web Services, and other e-commerce websites that are like Oracle or PayPal. But what I focused on this year, because this is my job and it's my passion to do all the research and go drown myself in numbers and resurface back up, spitting them out to everyone else. But basically I was long semiconductors this year, namely AMD and NVIDIA. These are companies that are worldwide, that ship all over. And basically, if you're either mining Bitcoin or you have a high-speed computer, you're buying a semiconductor. So if you look at those stocks, they've done really well. And if you know that you can be aggressive with buying options, and if your conviction is spot on, then you can basically multiply what you would have made just buying the stock. And so that's been fun to do this year, and there have been other good opportunities in this bull market as well.
That's pretty interesting. So really understanding product is important for this as well.
Yeah, absolutely. A good example of that is Forever 21 closing down. Here are some amazing facts about this situation. Here's a retail stock. It's global. It's got amazing margins whenever you talk about how much they have paid for their material, and then they sell it at a 63,000 square foot Madison or New York Square Garden type situation with 138,000 square feet as their largest store. Here's the deal. The numbers break down. Yes, Forever 21 had amazing margins. Yes, Amazon is still killing about 30% of all retailers over the next 3 or 4 years. But the big mistake that Forever 21 made was they were paying multiples, 10x times how much a retail brick and mortar should buy or how much they should spend for rent on a monthly basis. The store in New York was $1 million per month to basically hold the store open, even knowing that they were at a declining moment for 2019. And here you go. This is the byproduct of that, of really not being responsible with margins, both on the outputs side and then also on the storefront side. So many mistakes, but that's just one example as to kind of what we're getting into.
Well, that's really interesting because not only can we learn about how to work with investment or options in trading and things like that, but that tells us about how to look at our own personal income. And I'm going to guess that that is sort of going to lead us into talking about millennial debt.
Ah, yes, millennial debt. The average millennial owns $40,000 in student loans over the past 6 or 7 years. That will multiply. Also, the psychological, we're talking a lot about psychology and what kind of effects that has. It's a very fine line between, what I should say is we cannot conceptualize the negative effects that student loan debt is going to have on my generation. This is something that is actually going to get worse if we don't do something about it. And also over the next 10 or 15 years, if something actually is not done about it, we are jumping into an economic collapse. And that's 10 years out, unless we can fix it in the next 4 years, maybe within the next, presidential cycle.
Okay, that's really scary to think about because we're talking about just student loan having a direct impact on the economy as a whole within 10 years.
Absolutely. Okay, so I'm a good example of this. Even though I don't have on average $40,000 in student loan debt or whatever, I'm still a good example for just being a millennial. Let's say that I had $40,000 in student loan debt. That's the minimum, by the way. Some people have $250,000. Some people are $300K through medical school. But let's just stick with me and use me as the small example. If I have $40,000 in student loan debt, it is almost impossible to repay that on time due to living expenses. Also, the United States buying power hasn't really declined, and we're also seeing kind of a great market, but that's not making it great for lower average income millennials that just got out of college with no job in sight. So what's going to happen is this is going to pile up and snowball on my generation if something isn't done about it. It is not allowing us to buy homes. It is not allowing us to actually be free in the marketplace. I know I have a lot of friends that have done 100 interviews and no job, graduating from Duke or finishing up law school at Chicago or doing UT Austin. It's such a dense environment with so little opportunity. Something has to be done. And if it's not, spending power will decline. We won't be able to afford the things that we have. In the meantime, Amazon could also possibly not exactly crash, but have a negative effect, because we've actually seen a pretty good cycle. We could turn into a negative cycle somehow. So there's a lot at play here right now.
So with the impact that specifically is focused on the need to repay student loan, combined with the fact that there is the inability to, say, get employment to repay this. Let me ask you this. Do you see a resolution to this issue?
Yes. The only resolution that really makes sense is, and dare I say this, I'm not exactly a UBI, universal basic income, maximalist. I do think it's a good idea, and I do think we can pay for it. The issue is what it's very simple. The product called expensive college is a product of the 90s, whenever Congress passed a whole bunch of laws saying that college should be expensive. And I'm using, fourth grader terms here just to get to a point. The idea is that college doesn't need to be expensive. In fact, it actually needs to be somewhat free.
Okay.
Now, so the deal is we could easily just forgive it. The FDIC, the Fed could come in and you could have basically a null set zero, but that's not going to happen.
I was going to ask you if that was removed altogether, if that would impact things. Okay, you've answered that question for me.
So the idea here now is if we continue on into the future and still have expensive college and no loan forgiveness or any type of like opportunity package to where even if you did pay for college and it was super expensive, you're still guaranteed some type of income, some type of foundation, right? I mean, kids are working hard. Kids are spending a lot of money. I did the same thing. I trekked through college and it was very difficult. And it was even very difficult if I wouldn't have had the opportunities laid in front of me with the family business and things like that. I would have had to do probably 2 or 3 more years for my license. I never wanted to really be a therapist. I was just always interested in how the brain functions, how the brain works, and how we kind of interact with each other as humans on this planet. But really, it's kind of a difficult topic, and it's also a hard one to tackle. I just think that forgiving everything for the generation between 1982 to 1993, 1995, and then continue on to tweak things and make college less expensive would be a great idea.
Let me ask you a question. Currently, you are a options strategist with Simpler Trading. Tell the audience a little bit about what you do and how they can connect with you and what you can do to assist them in making their life a little bit better.
Absolutely. So Simpler Trading is a great team. I mean, we're probably one of the best out there as far as informing and educating people on options and how to actively manage their own money. What we do is take it from an educational standpoint and really shorten the learning curve. So if I wanted to be an amazing baseball player, there's a certain amount of time that I need to spend playing baseball to get good at it. And the learning curve still applies to trading options. And so what I do on a daily basis, and yes, even on the weekends, is I love numbers. So I will crush numbers and I will make sense out of them, kind of like the Forever 21 analysis. And then I'll do this across all sectors, whether that's utilities, industrials, anything and everything, currencies and equities or futures. And what I do is I go, what is giving me the best opportunity and the safest opportunity for me to exploit these market moves? And so what we have is memberships. You can sign up and you can follow me in the morning. I'm doing a live broadcast every morning for 1 hour. And then we have other traders and the people like John Carter, who's president and founder of the company. And we have Henry Gamble and T.G. Watkins and Danielle. And what we do is we broadcast throughout the day what exactly we're doing and how we see the markets. And it's going great. We have a huge audience. It's continuing to grow. And we couldn't be happier doing our job, because not only are we, doing something that's benefiting the lives of others, we're doing work that's meaningful to us. We are passionate about this. We don't just wake up and think, oh man, I have to trade options today. Like, no, we love it. And it's our passion.
Well, I want to thank you so much for the information that you've shared with us today. I think that this has been very eye-opening, and I would love to have you back on the show so that we could talk a little bit more and really continue to educate and equip our tool belt with the information you give us.
Thank you for having me.
And I want to thank all of you for tuning in to another episode of Rebecca Sounds Reveille. I think the information that Jack shared today was phenomenal. In fact, I think he really made the information very simple. We definitely want to connect more with him, with the things that he can do to really expand some of your knowledge and get you in a position that will really launch you forward. In fact, options may be something that you never knew could get you to a place quicker than you thought was possible. So definitely connect with him over at Simpler Trading and follow him on social media. You'll be able to find the information through the connection that we have with the article that accompanies the show. And I ask that you share this information with your friends, your family, your loved ones, everybody that you know, and all you don't. Thanks for tuning in to another episode of Rebecca Sounds Reveille.